Hi everyone. Today let's talk about the PPI report, as well as Fed Bullard stepping down. Then we'll get into the economic factors. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PPI came in better than expectations, the same way that the CPI report did. Once again, inflation looks weak, and the markets really like that as they charged higher again today. PPI came in at 0.1% versus 0.2%. Obviously, we would like to see that negative as we saw the last iteration, but still better than expectations. And they mention here, headline PPI actually fell 0.4% and was unchanged, excluding food, energy, and trade services. Moving over to Fed Bullard, surprisingly, he is stepping down to take a position at Purdue University effective 15 August. He's been the most hawkish of the Fed officials, which is kind of interesting. He said he wants to recuse himself from monetary policy, and I wonder who's going to be the most hawkish of the group now. He was the one saying that he wanted to hike the last time when we paused, and that he wants to continue to hike this year. Of course, Jerome Powell mentioned he wanted to hike 2 more times as well, but Fed Bullard has definitely been more hawkish than any of the others. But now he's taking a job over at Purdue University starting on 14 August, and he will no longer be a voting member or a member at the St. Louis Fed. And they mentioned they will be hiring a national executive search firm in order to search for his replacement. Moving over to the economic calendar, you can see PPI lower than expectations, jobless claims also better than expectations, headline PPI also better than expectations. So everything was better here. And then you can see that revision here, negative 0.3 to negative 0.4, better than expectations. And the previous read here for core was 0.2, also revised down to 0.1, so everything was good across the board today. Tomorrow, not a whole lot on the schedule. Michigan 5-year expectation for inflation, Michigan consumer expectations, as well as consumer sentiment. And based off of the inflation data that we saw here recently, honestly, I would expect them to step these down fairly significantly. Moving over to Max Pain, you can see it stepped up a little bit to 441. We're all the way up here at 450. Which is all the way at the top of the puts here. We're right at that highest call strike. I don't expect to finish higher than that tomorrow. If anything, I would expect at least a little bit of a pullback. We'll see how that plays out. But I also said that 442 was going to be our upside limit. And since then, we've drifted to this next one here at 450. So could absolutely drift a little bit more based on what we've been seeing. But 450 is a very high call strike. Put call ratio still at 1.7. That's a pretty big step up from yesterday. Total options over 1 million now as well. But either way, at this point, 442 to 450 makes sense for the close tomorrow. Moving over to the charts, not much to say here. Everything was straight up after the PPI data. You can see a big wick at the end of the day. Overbought conditions across the board. Above this trend line here now, looking at 453.07, looking into that zone. Like I said, I wouldn't be surprised if we got a little bit of a pullback here, but we're not seeing that yet on momentum. Momentum super bullish, RSI super bullish, and pretty much everything across the board is bullish on the major indices. Moving over to the NASDAQ, similar thesis, straight up like a rocket ship, pushed absolutely massive today, around $6. We're right at that trend line that we've been watching. This one goes back quite a while here on the 12-hour chart, marking some tops and bottoms, more like a midline here, but we're back in that zone. And you can see what that looks like. We didn't quite touch it yet, and we might get back up there and touch it tomorrow. Right now, the range that I'm watching is 376.45 up to 381.90. And then if that breaks, there's actually quite a bit of room to my next level. There might be something in here that I should be watching, but this is what I have for right now. Moving over to the Russell and the Dow. Russell went higher, makes sense. Pulling back a little bit after hours, which is interesting. Might just be a widening spread, but everything's still super bullish here on the Russell, looking up to 195.15. I also put an alert at that high just to see what happens for tomorrow's session. Otherwise, looking at the Dow, pretty unimpressive, honestly. Down on the day. after throwing some wicks into that previous high. Like I said in yesterday's video, this is more consolidative than any of the others, but it is still looking slightly bullish as long as it continues to hold this 343.23 level. If that breaks, then you're watching down to next trend support around 341.26, and if that breaks, then 339.11. Otherwise, if this holds, we push up to this zone. Maybe we see a continuation here on the Dow. Momentum, not super convincing, moving towards bearish. RSI also retesting that SMA, waiting to see if that comes back down to the 50 line. Still consolidative overall. Moving over to Apple and Tesla, you can see Apple found a little bit of legs today, continues to rally, did sell off a little bit in the mid-session, made most of its gain in that pre-market. Momentum, slightly bullish. RSI, definitely not convincing. It does kind of look like it might continue to break down here tomorrow. Fairly interesting. Still watching 186.81 as potential support and 193.96 as resistance. Tesla starting to make that move up into that next high of this triangle. Momentum bullish. RSI more bullish, stepping up in volume. Everything looks good for this continuation here tomorrow on Tesla. Moving over to Alphabet and NVIDIA, the two biggest players again here today. Alphabet breaking above 122.54, looking at 126.48. That's the high from this initial consolidation before that wick. 129.92 is that upper level. Right now, everything looks good. Nice double bottom, back above all the EMAs and SMAs, back above the 50 line, momentum moving back towards bullish. Alphabet looks good going into tomorrow's session. NVIDIA straight up like a rocket ship, making new all-time highs. No price targets here, obviously, as it's continuing to make new highs, so I have no upper resistance. Moving over to staples and discretionary. Staples rallied a little bit. Trend is continuing off of this lower level. Still consolidating, still a lower high from the previous high. But if we see a nice push up to the 200 SMA, that might be a bullish development. Also getting a close above 74 would also be good. We tested that level again here today, but couldn't hold above it. Discretionary, on the other hand, continues to rocket higher. Took out this trend line and closed above it. Tested my 174.76 level. We did not get above it, so that's still holding as horizontal resistance. Momentum still bullish, but slowing slightly. RSI, higher RSI read from the previous high, so that trend is continuing here now. Certainly could reject from this level, but nothing is showing us that quite yet. If that level breaks, I have one at 180.10, which could be a nice little move up to that next level if we get a continuation. Moving over to utilities and communication. Utilities going higher, retesting that 76.18 area, back above all the shorter term EMAs, and looking to retest the 200 up at 67.65. Communication up like a rocket ship. This is actually the weekly chart. We're hitting one of my levels going back to this wick high from 18 April of 22 and that kind of midpoint from this consolidation that we had during that period. If that level breaks, I'll be watching for the high from that consolidation up around 72.06. Everything looks super bullish here. We finally got into overbought conditions here on the weekly chart as well. Momentum bullish, and everything is still super bullish here on communications. Moving over to breadth here on the 50 and the 200. 200 basically flat at resistance. 50 up slightly, but not as much as I would have expected on a day like today. We did get into overbought conditions here for the first time in a long time on this 50-day chart. The last time was November of 22, and that was also in this same region. So starting to get into those conditions where the markets are going to get exhausted. Not quite there yet. Could absolutely go higher into this 92.25 zone. But if we do get there, that's going to be a pretty key indicator for me that we're going to be going lower and that we've topped out, at least for the short term. You can see that same rising wedge type structure here on the 50-day average as the 200. Might get that breakout, top out, and pull back. That would be quite bearish. 200-day average, still bullish momentum, still bullish RSI, and not overbought quite yet. Moving over to yields, this is the big driver for markets. As inflation data comes in light, yields are starting to pull back more and more. 2-year pulling back all the way to that 4.5 zone in my opinion, waiting to see for that continuation. Bearish momentum, bearish RSI. 10-year also pulled back to that previous consolidation, down to that 3 3/4 area. Bearish momentum, bearish RSI, again driving markets higher. Moving over to the dollar, what a dumpster fire. took out my level by a lot, took out that 100 level, and now we're actually at this very long-term downtrend line, marking the lows here going back to October of 22, marked the high in March of 23, and a little bit of a consolidation here in May of 23. And then once again, we're back at that level after a massive falling knife, super bearish momentum, super bearish RSI. You can see what that looked like on the 4-hour chart. Absolutely cratering here with inflation coming in light and yields following suit. And this is continuing to drive markets higher in my opinion. Moving over to JNK and TLT, JNK continues to rally, got above 92.50, retesting that trend line. Trend line held for now. See if we get up to that 93 area and push higher. Bullish momentum, bullish RSI. Volume did step down a little bit, which is concerning, but overall everything still looks very good here on JNK. TLT, huge push higher with yields continuing to fall on the inflation data. We're up to the 55 EMA. This is a bigger push than I would have expected, but inflation also came in lighter than I expected as well. Back into that highly traded zone around 102. 102.50 is a level I've been watching for a long time, and I would expect that to get tested tomorrow. If we break above that, I have 103.70 as my next level, but you have the 200 SMA sitting at 103.43. Moving over to the volatility indices, MOVE index did not move much at all. Momentum moving back towards bearish. VIX also consolidating in this previous zone. Momentum turning back towards bullish a little bit, which is interesting despite the super bullish day that we had across equities. Might see this rally a little bit, maybe a slight pullback in tomorrow's session. That would be interesting, but slightly bullish here on the VIX on a day where the markets were up quite a lot. Moving over to my accounts, I made decent money, $600, at least $1 for every dollar that the NASDAQ went up, which is good. That's usually my target. I should have made a little bit more money. I just didn't expect the markets to rally as aggressively as we did. Once we popped in the morning, I thought that would kind of be it. Maybe we'd see a little bit of a pullback, but it just didn't happen. So markets continued to rally super aggressively. Made a little bit of money here on some puts. I have another 30 cents here on that put on the IWM. Still have my covered calls. I rolled one out to 4 days from now up to 376. A little bit of room for that one to make money. Tomorrow I have a 374. I might look to roll that one out in time as well. We'll see how that plays out. We'll see what the markets are doing. And then I have some puts, a 378 for tomorrow for $94, and then a 375 for Monday for 67 cents. I think we'll see at least somewhat of a pullback. And we are at 52-week highs on the NASDAQ, so maybe a little bit of caution, but like I said, everything is super bullish still. Let me know down in the comment section what you thought of the PPI Data or Fed Bullard. He's been the mouthpiece for the hawkish Fed for a long time, and what do you think is going to happen now that he is gone? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.